Hello, traders. You're welcome to this episode technical analysis of GU, Aussie, and US30. Yeah, I got a mail when some people were telling me to do analysis on gold and US30. All right. So I'm going to, because of time constraint, I'm going to try as much as possible to just to run through and give you the direction of the trend and the levels we should be looking out for as we step into this new week. So that being said, for the technical analysis, I'm going to be dissecting it. But when you want to know the fundamental analysis, all you need to do is go to forexfactory.com, go to calendar and see the news ahead. And apart from that, do well to visit this site againstfs.com, register and join our community. Send us a mail so that we can mentor you. We teach you how to trade. That is basically what we do. So without wasting much of our time, we are going to start by where we stopped on Friday. When we stopped on Friday on GU, that is GBP USD. All right. So last week we saw that price actually gave us this low, all right, which we analyze, and we are experiencing moment of relief, all right, that we know. And I just told us that this is a strong high, and we have other block here that we and my team, me and my team, we have already marked out as our other block that will dish out a sell as soon as this moment of relief, this bullish run is over. And I told us that price has no business breaking this level because we have identified from our higher time frame that we are what? We are bearish. All right? We are bearish. You can see that we are bearish on the higher time frame. All right? Since it's the higher time frame that decide where price should go, we are bearish. You can see it has been breaking structure to the downside. So we have established that we are bearish. So let's move to our 1 hour time frame where we'll do our analysis for us to really understand. So I told my team that we should, since we have identified that we are still bearish, and we have identified this other block that will dish out a sell for the underlying trend to resume. Now, all this push to the upside is just a moment of relief. Then price got to this point. It looked as if it will not trigger us. I told them one thing about trading is that you need to be patient. All right. Wait for price to come to you. Don't rush to catch price. Price will surely come to you. So price got here, it created a high, then it pushed to the downside. You see, it pushed to the downside, it created a low. But you should understand that this is an internal low. The actual low is this very point where we should be targeting, where price should come and violate. All right. So at the end of the day, price came, created an internal low. Then on the 5th, that was last week, on the 5th, that was on Wednesday, around 11, price quietly traded up to this point and tapped us in. If you want to really know whether we were tapped in or not, look at this trade or look at this level. And let's go back. You see this other block here, we mark the high and the low. That is how to identify other block. And price indeed came. This is where we place our order, and we are targeting this low because we know that I've told us we in trading we trade from the strong high to come and take out the weak low. So price tapped us in, and immediately it gave us 190 pips. And it's normal because of this level, we should experience a pullback, all right, for price to continue pushing to the downside. Some of my colleagues, my mentees, they were kind of, oh, we should take partial. I said, well, if you want to take partial, please do. I'm not against it, but I used to do like that before, but I will not trade like that anymore. Okay, take partials if you want to take partial, but our target is for price to come and take out this low. We are expecting price to come, create another low to invalidate this low. Then price will come, create another low. This is an internal low. This is an internal low that price, get to this point, when price get to this point, all right, we should be expecting price when it gets to this point, because of this evil handle here, 2300, price should get to this point, pull back, then before it resumes again the underlying trend. All right. So when price gets here, there will be a trigger, a buy. This place will trigger a buy. Then the buy is not going to last long before it will resume sell. So don't panic when you see buy at this point, because once price get to this level, it's going to trigger a buy, but it's not going to last long. All right. So at the end of the day, the overall trend, we are still very much bearish. All right. And our target, the first target we should be looking for is this point. Then the next one is this level. And all the point we should be putting our eyes on is 2300, 2100, 2000, and 1900. When we price get to this point, all these levels, we don't control the market, but we know the direction of the market. So the overall trend is that we are still very much bearish. Price will get to this point, retest this level before it will continue down. All right. So in essence, GU, that is the GBP USD, we are bearish. But because another thing we must know, because of this new US President Donald Trump, because of the 25% import tax that he has imposed, well, it makes the pair to be USD to be very strong. And another thing is that it's posing a kind of threat. Investors, they are, kind of withdrawing their money, their capital, to put it in safe haven. And when we say safe haven, we all know that it's gold. All right. They are removing their asset, putting it on gold. That is why you see gold is always bullish. It's bullish, 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 bullish. So people are just investors are putting their money, withdrawing their money from USD and putting it on gold. All right. So that being said, we should also be careful because there are a lot of volatility that is uncertainty rather that is ongoing as the new US president is trying to impose some strict measures. So that being said, on GU we are bearish. So on gold, like I told us, if you go to the higher time frame, the daily, you discover that we've been bullish. We've been bullish. All right. We've been bullish. All right. So we scale down straight to our 1 hour time frame where we will do the analysis so that we'll be very fast about it. Now we have plot our um, Fibonacci 2. We know from this level to this level, this is weak high, this is a strong low. This is a strong low because we have been breaking structure to the upside. Now, price came, created this low, which is a strong low. Let me highlight it. This is the last low here. Then at this point, it's just a wick above. All right, it's just price wicked above, then there was a pullback. So what we should be expecting from this level now is a push to the upside to break this level to create another high, because this is a strong low while this is a weak high. All right, this weak high should give way. This weak high should give way. So as we step into this new week, we should be expecting a bullish run. All right, we should be expecting a bullish run. All right, so in essence, what we should be eyeing here is 2900, this level, 2900, that is this level, is 2900. All right, that is the first stop where price will get to. Then price will get to this point, then you see a little push to the downside before it continues again. So in essence, gold, we are very much bullish. We are very much bullish because of what is happening in the US. Investors are pulling out their money from the US economy and pushing it into investing it into gold. That is why we see gold, we call gold as what? Safe haven. So we are bullish. We are bullish. So we see a bullishness, but we should be careful here because when price action created this high, all right, instead of price to break above, it only wick above, but it did not break above. It closed exactly this point. And what does this tell us? It tells us that it just told us that he has created a double top, all right, equal highs. And once you see equal high, the sign of equal high is that there's going to be a push to the downside. So let's be very, very mindful as we see this place. So I repeat, we will not classify this as a strong high yet because he has not done its job. All right. I think we should correct it immediately. We should correct it because this one here, it did not break the structure high. It only created equal high. So, and once you see equal high created, we should know that this guy here failed to do its job. This guy failed to do its job. So automatically, we should be expecting a little push to the downside. Now that there was a rejection from here, there's a push to the downside. Then we can now see again that price is preparing to push to the upside because it's holding at this point. You see price also hold at 28600. All right, 2860. At 2860, price is holding here. So automatically we can still resume the bullish run. All right, but we should be very mindful of this because it created equal high. All right, so in essence, we are bullish. All right, we are bullish. We are very much bullish on gold, even though maybe, for example, you see a bearish run, but just mind you that the bearishness cannot go below this 50% before it will resume the bullish underlying trend. So as for gold, we are bullish. We are bullish. All right. One thing you should put to heart is that since price created equal highs here, so be very careful. Watch this level very well. If he holds, then wait. I personally will advise, wait for this move to break this level, create a high, all right? Create a high, then wait for a pullback before you get involved in the market. I tell you, that is my analysis. If I see this move, I will not even enter. I will wait for it to break this structure to the upside because here it has already created equal high, meaning that price can turn from here because now that it has created equal high, all right. If you get involved from here, price can get here because it's as if this level is holding. Price can get here again, then turn and push to the downside. But the idea is to come and clear this liquidity here, clear this liquidity. But there's a level here that will hold the price before you now start coming, before it will resume the underlying trend. So gold is bullish. Thank you, guys. And the next one is the US30. The US30 is been bullish as well. So the levels we should look at, if you go to higher time frame, you understand that we've been bullish. All right, we've been bullish. But one thing that you should know is that when price got to it created equal highs, so there has been a struggle since it created equal highs. On you understand? So we just need to be careful and wait for price to break this level. Now, if you scale down to 1 minute, 1 hour time frame, you discover that this is a level that has been very strong. It's obvious this level because price has come, retested it, retested it again. Now it's coming again. And I told my team, if you're the one that trade US30, wait for price to complete this move. What do I mean by that? We have identified that this level is a strong level, and this level two, price is finding it difficult to break above this level. So what you now need to do is for us to wait patiently for this move to be completed. And I tell you, there will be a push. Once this push is completed, if he gets to this point and you see a hesitation, then this move, all right, this move is either the move will come, break this level, retest and continue, or price will come here, we break this level, come, then start coming down. So On US30, you wait for this price level. Thank you so